Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Good morning, Marty. I don't know how you do it, Marty, but good morning and thank you. How are we doing in YouTube? Thank you. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. Of course, today is a outsized mover due to geopolitical economic events. And those of you who have not been in the business long enough to observe these kinds of behaviors, you want to take note. The reason you want to focus on today, besides attempting to trade it, is to understand how your trade plan fits into this, and also to have the discipline if you do not have a plan that is aligned with the current condition of the market to wait for the trades that fit, that have an edge. That is the actual business of trading. And these are the conditions that can trigger emotional responses, over trading, FOMO, and the rest of it. It all is magnified when you have increased volatility. The other thing about volatility, what in your trade plan do you have that tells you how to adjust your trading to the range of the rotations? Do you not have that in there? Time to put it in there. Do you know how to do that? Well, if you don't, that's what Trader Lab is about, building trade plans. It's a community of traders that have come together to leverage their collective experience, and we all trade differently in the sense of the time frame or fractals we operate in. But one of the things to think about is, can you derive a benefit from the current economic, or I should say market condition that is responding to external geopolitical events? One of the things we focus on, among many things in the Trader Lab, is to help traders understand market mechanics. How does the market work? Why does it do what it does? And how can you get in alignment with it? The other part of that is, what about if you're not in alignment with it, or your plan is not in alignment with the current condition of the market? And a lot of that has to do with rotations, volatility, risk management. These are the priorities, really. Being here for tomorrow, not getting all focused on what's happening today. So we're going to go into it today. We're going to talk about the Trader Lab, structured trades in the Trader Lab, and also the challenges about today. And I want to focus more on sustainability. Not today as much. I mean, today is just what it is. And if you have a plan for it and you can adjust, you just do your thing, and the outcome is always random. But if you don't have a plan for today, then you should have a built-in circuit breakers that keep you from engaging when it's outside of the parameters that have been defined for your trades. In other words, where do you enter? Where do your stops go? What is the structure? If that range gets too wide or too volatile, how do you adjust to it? Do you go down in size? Do you go to micros? What do you do? Do you have to use larger stops? Do you have to adjust your risk per trade? Have you thought about that? Well, this is what's part of a trade plan. There are many elements to a trade plan, and what we attempt to do is adjust what we do to the current behavior of the market. So you need to be in alignment with it. And if things don't qualify based on where you have a statistical edge, then in my opinion, your job is to be a tourist and wait for the market to calm down to where it does fit your trade plan. And like everything, past performance is not necessarily indicative of future results. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is not a trade calling room, and if we get into real time, we'll talk about it. Currently, if in case anyone has missed it, the market is falling out of bed, and we are in a liquidating market. A liquidating market is a bit different than most of our day-to-day walk in the park rotational trade. when you're in a market like this, I would suspect maybe the appropriate thing to do is get in alignment with the dominant side. So, do you know which side is dominant? I hope so. And if not, we ought to be talking about it. So, this is the RTH Open. Now, you know, we had a big sell off yesterday. You know, the market is in trouble. If you don't know why, then you should just read the news or understand what the economic impact of tariffs is. It is, I would say, a financial nightmare, and it's just a personal opinion. It is not a political opinion. It's just based on the market mechanics and how the global economies are impacted. This is not another day in walk in the park. This has substantial geopolitical and economic impact on a global basis. So if we can accept that, and it's up, you don't need to accept it. I'm just saying it's just a viewpoint. Then the market has to re-auction or take these things in, and then the market has to figure out, and it will figure out at some point, what does it mean? Now, what it's doing currently is trying to figure out what is the S&P, what is the market worth based on the changes in the economics. Cost, what's it going to do to the U.S. economy? What about retaliation coming from other countries? What's it going to do to the consumer in the U.S. when we have higher prices? All of these impacts now have to be, shall we say, run through the hopper and evaluated by the participants. So we have a lot in front of us, a lot of volatility, a lot of risk, and also a lot of opportunity if we have a plan that can align with the rotations. So is this a condition where you ought to be taking counter trend trades? Now, if you have an edge in this market to take a counter trend trade, that's your business and that's your plan. I'm going to suspect and suggest that maybe you get aligned with the dominant side. Think of it like there's an advancing army and a retreating army. And counter rotations are, let's call them counter attacks. Do you want to join the guys that they say, hey, hold the line and thanks, we'll remember you, and go the other way? So the side and retreat by some time. Counter rotations in this context are opportunities for longs to potentially unload. It's one way to think about it. And it doesn't mean there won't be short squeezes. There's always going to be short squeezes because retail traders or short-term traders trail their stops. And if the market counter rotates into a swing where there's stops, you're going to get acceleration and a squeeze and a pop. And then if that exhausts, you're going to potentially have continuation trades. Anyway, if you have questions, please post them. And I'll do my best to get back to them. Now, this is the RTH Open. This is 8:30 Central Time. I'm going to go over some things. This is yesterday's low, and the ETH volume point of control was located right at the ETH low. What the volume point of control or ETH volume point of control is suggesting the retail price. Now, there's one other piece here. Now, this is the ETH, and this is right before RTH Open. This is a sweep, and often in the Trader Lab, we use a sweep to suggest the potential for a counter rotation. So right here, we have a sweep. Now, I'm going to show you a couple ideas, and none of these are trade recommendations. You know, it's just market structure. And when you have market structure, you can use that. And what is the language? Sweep, icebergs here, delta here. If we look a little further at this, you can see you're selling icebergs, only 5 buy stops going off. I call this stop divergence. It's not a big deal. It's just the only thing I use from indicator world, and that is divergence. If price is moving higher and you have less of something, right, it is divergence. Okay. Now, the other part of this is I have a sweep, I have divergence, I have icebergs, and I have no idea, except I have components of pieces. Now, as the market comes up, right here, in the ETH, and I'm getting into something micro and somewhat advanced, this location here, well, let me just draw this for you. I just want you to see structure, because you're going to see structure everywhere. The problem, of course, is what does it mean and where does it happen? This is a distribution, too high, too low, and this is the retail or highest volume. So in the high volume, when we're looking at this, if I break away from it, it suggests maybe this is too high. And that creates a micro high volume structure and a potential reversal. Now let's come back to what we know. The ETH fair price, highest volume, is here. And going right into the RTH open, we have yesterday's low and we have the ETH volume point of control. So the retail price in the ETH time frame, if you will, or fractal, and in the microstructure, too high here. This is a fractal. This is the full ETH retail price. This is a micro retail price. And the outside edge is there. So this is like an auction. That's too high. I'm out of here. Now what? Next auction. If it's too high, we're out of here. So now let's go into the RTH open. This is material. You'll see why. So RTH open, you'll see it. It resets at 8:30. So this is now too high, too high, too high. Let's watch. I'm going to show you the opening trades. Now, 8:30, watch 8:30. Now, right here, we get the VPOC migration. That's saying that in a microstructure, this might, I always like to use the term maybe, be too high. I'm going to put a little notation there. I call it a variable high volume node. And what it is, if you're subscribed to a concept of the auction, it is a language. So what I'm do, and it's not any one way to do anything. I read this, and I read it as language. I don't use indicators, so I kind of took myself out of indicator world because I grew up with them. Indicators have been around for 40, 50 years. I've been trading 45 years, and indicators were new when I first started. It was just getting our hands on them. Wells Wilder, so that was it. And then I shared an office with George Lane. He created stochastic. So that was a big deal, oscillator. Ooh, crossed over. So I thought this was it. And I spent half my life probably, or at least years, trying to get those indicators and time frames aligned so it would just work just right. It never did. It did work randomly. So here's too high. This is the new retail price. This is yesterday's low. So now RTH open. Here we come. I have to give you this little idea here about things. Notice the sellers here, variable high volume node, their ETH retail price, yesterday's low. So let's watch. This is a variable high volume node. Here is a sweep. So what do we know? Too high, too high. Yesterday's low. All these are material. The key level, this is the first short trade. This is a Trader Lab structured trade. Now, the problem for all of us is speed. So let's watch. So right here, so here's our first trade in the Trader Lab. Variable high volume node, variable high volume node, and too high and too high. So too high, microstructure, and the sellers are here. So now it's come across and I'm looking for a short somewhere. I have resistance here. I got resistance there. And now I cross above the developing volume point of control. So this is saying counter rotation. So here I'm looking against levels. Yesterday's low, this. These are all my areas to look for a short. I have a sweep. A sweep, remember what we talked about just before. Sweep, let's see if there's anything somewhat consistent in any of this. Sweep. So now we have sweep. We have sweep here, actually. There it is. Sorry. So there it is. Let's watch. Sweep. Too high. Too high. Sweep. Too high. resistance. Watch. So this is the first short. Now, if this is too fast for you, then it wouldn't be your trade. But this is a Trader Lab trade. Now, if it's the volatility is too high or it's too fast and you can't get into the thing, then you just wait for your next bus. If you're responding to FOMO, that's more important not to than it is to be in any trade. Because if you get rewarded with FOMO, then you're going to do it again and again because you've had that reinforcement. The sustainability of a trader is not to do the things other traders do when they lose control psychologically and emotionally. So what do we know? This is the first trade, okay? And nobody knows. Hold on one second. I got to make an adjustment here on some stuff. Hold on one second. So what we want to do is we want to look at our levels. So this is the first short. Now here we have sweeps on the other side. And I like in Bookmap, we can see the sweeps and we can see the delta. The delta is the aggressors, okay, and the sweeps are showing us, and what did we see on the buy sweeps? Potential for down rotation. What might we see on sell sweeps? Potential for upside rotation. And the fact is, you see it here, right? Well, there's your rotation. Who knows? There's nothing mechanical in the sense of anything. This is high volume right here. If it's too high, we're going to leave it. So it becomes our resistance. Now here, once we cross above this, then it might be time to get out of Dodge, subject to how you operate from a fractal. Let's look over here now. Right now, this is the outside edge of this distribution. So we have VWAP, we have mid, and we have this, which is the current retail price right here. I'm going to label it, by the way, variable high volume node, because it's going to move. So I'm just going to throw it in there. So when it does shift, we kind of got it there already. So now the next location is here and out here, low volume zone. Let's see. If you got short here, if you took the mid or the VWAP, you'd take a stop this outside edge. We have the opening swing high, and we can come out and test the overnight volume point of control. This has a high probability, as does yesterday's low, of being tested. So all we did here is we have our open, we have a gap, we can fill the gap and test into here. And again, no clue. Okay, so if you took this, you would take a stop. You took this one, you would have a nice trade. It's just the way it is. There's no magic bullet and certainly no magic 8-ball. We had one on the trading desk. It never gave a good answer. So this was where the last time it was too high in the ETH. That's why it's resistance. Now, the problem, of course, with all of this is the thing about it is there's no certainty. And emotionally, like here, you see the sweep. Well, we're not at a level yet. So this says counter rotation. So I understand that. But what I need to do is wait for locations that I have vetted or are part of my trade plan. Taking a stop is just the way it is. It's overhead and cost of production. Now let's look at the trigger. Just going to show it to you. Now, what's key about this is this. Too high, high probability, fill the gap. This is all the reason for this. So when you're coming up here, you have no clue. At least I don't. You do, you let me know. The buyers are here, and as far as we know, we're going to keep going. That's all you know until it changes. Now, location and trigger. So now you have a trigger. Now this could be a trigger here too, except and I'll give you the except. It did not fill the gap, and it did not test the ETH volume point of control. So if we open lower outside of range, there's about an 85% probability of testing the overnight volume point of control. And you got to vet these for yourself. Past performance not indicative of future results. And about a 64% probability of filling the gap. If you know that, and you would if you're in Trader Lab, then you would not be stepping in front. Now, if you took this, it's not unreasonable to take the mid and the VWAP for continuation, because we may not come back, you don't know. So, but the probabilities were high to get here, but it doesn't have to do anything. That's just the way it is. So now this is a structured entry. I'm going to show you the structure, and I always suggest in Trader Lab, and here's what creates a structure. It's not complicated. Don't make trading more complex than it needs to be. It's really not complex. It is random. Look at the structure here. This is an auction. This chop right here is an auction. And right here, we have buyers or delta. And the reason we're not going up past here is because they're absorbed. So I have selling icebergs, and that's all fine. So, and buy stops going on. At this point, no clue. Now, the only thing I trade, and it's just in what we attempt to do in Trader Lab, is to identify locations of potential behavior and wait for them. So when you're waiting for something, you can anticipate where it might happen. So we're not trying to, get stimulated with the dopamine and the adrenaline every time we see a wiggle. The idea of Trader Lab is that you have a trade plan so you can anticipate your trades. So when we come up in this area and we get in this, we know that if we come into yesterday's range, we're going to squeeze. But if we only test these key locations and I get a sell trigger, then I put the trade on. That's Trader Lab. So let's look at the trigger. In here, so right here, no clue. This is just a chop. It can do this or this. The key to this is location, think real estate and high volume. So the trigger is if we break out of high volume and then test it. Now watch what's happening. These guys are absorbed. Sellers are below the buyers. That is, and the thing that's important, I want to come back and stress, it's not that you have a trigger. It's that you have a location and a developing trigger. That's the difference. There's the trigger. Now, the outside edge is right there, that low volume node, right in here. And that low volume is right there. The sellers, and we check the high volume, the microstructure, we break out of it. We pull back and test the volume. This is the same as that. This is higher time frame. This is microstructure. So if this is too high, then potential to come here. That's the first piece of this. Now we have to enter, right? How do you enter after a trigger? Let's go take a look. There. Then you're going for this or this, it doesn't matter. It's all up to you. Outside edge is here. So what this is an outside in trade. Your low volume node, and this is all individual, is here. So it'd be kind of like this. Let's watch it. And where's our resistance? Let's come back. You've seen this 100 times if you're in Trader Lab. Where's our resistance? It's right there. If these extended indefinitely to the right, I wouldn't have to move them. Maybe Bookmap will do that for us. So I don't need to stop and do this. So here's what you have. Trigger, location, limit order can go one tick in front of this. Stop can go 3 ticks above that. It's just an idea. You need to vet it. You'd be risk neutral if you took it here. It comes back here. You have another microstructure here. There's another trigger. You can sell this same trade here. We're in a downtrend, so I suspect you might want to be a seller. Call me crazy. Well, don't, but just saying. So short, short. Now we have another micro trigger right here. Let's look at it. Break. So resistance, trigger, resistance, trend down. Are you taking longs? Well, up to you. Me, not so much. Resistance, resistance. Microstructure is right under here. Let's draw a little box here for you. I do this because I'm using the auction and I'm looking at the behavior and of the participants. So this here is resistance here. I test it. Here is support. The buyers are here. You can see them there. Buyers were there. That's why we got the rotation. When I break under here, I have a trigger. I pull back to the high, where am I here? The low edge here. I can put an order here and put a stop 3 ticks above there. Or, and this is the high volume. So I can be selling this, stop there. I can be selling that, stop there or there. And these are all Trader Lab potential shorts, okay? Any questions so far? Let's watch. This is VPOC migration. That's why I put this here, variable high volume node. At the moment, this is too high. Now remember, market can do anything. So what is happening here? Let's come back. Too high, see you later. Auction, this is called a distribution. You fall out, you start a new distribution. You fall out, new distribution. Outside edges here, outside edges here, outside edges there. So if this migrates, this is saying now this is the fair price because that's the highest volume. This might be too high. And if it is too high, it sets up a condition called mean reversion, which is outside in trading. Trend down, no longs. Well, up to you. Me, not so much. Where do I come back? We have high volatility. We come back to our volume in here. This was too high. This is too high. Remember where your stop is. It's out here. Unless you are managing your trade. And you can manage your trade any way you want. By the way, what is this? A sweep. What happens here? High volume structure. So if I see a sweep and I all of a sudden consolidate, what is that? Isn't it one of these or one of these? Isn't it the same? So the sweep alerts me to the possibility of a counter rotation. Trader Lab processing. Now, right here, when I see the chop, I know the possibility exists for that. So, and now let's look at the chop. Let's look at this chop and try to read it together. Remember, this is language. Now, this is a foreign language, right? So sweep. So right here is my volume. So my resistance, let's look where my resistance is. I've got resistance here, microstructure, break low, resistance is there, right there. Does this look familiar to what I was just showing you on above? And if you missed that, watch the stream so you could see what trading in fractals is all about. Break low, microstructure here, break low, too high. Microstructure here, break low. Sweep, warning Will Robinson moment. Resistance, 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 resistance. Don't forget where resistance is. you'd get taken out if you're micromanaging. If you stay back one, it'd be here. This is all the same thing. Now, when you get this, if you're micromanaging, you'd be out here. I don't have a problem with that if that happens to me. I just have to accept the random noise. So what happens here? Resistance. This buyer was absorbed. Break. Still in the chop. Right here, looks like it's going to zero. Reversal. Look at the change in the buying here, right here. It's not the same as this kind of thing, where we're just, it's just, see the difference? So now what? Well, depending how far back you're here or you're, wherever you're managing, that's something you have to individually determine. So for me, I'd be out of this thing here or here. Doesn't matter. So let's look. So for me, the way I try to operate in this kind of thing is, first of all, very patiently. And also, I have to be very conscious of my emotional state because you can get excited, the adrenaline, the dopamine, and you look at these rotations and the dollar signs flash in your head, and that's the lunatic who's under the hood. Hyde. Jekyll and Hyde. Hyde's the lunatic who grabs the mouse and starts doing things that you, the conscious professional trader, wouldn't do. But you really have to have guardrails. So this is a low volume node. We came out here. Here, let's come back here before this thing happens here. This low volume is here. I'm going to mark it because this is what sets up something called mean reversion. And mean reversion is outside in trading. Now, this is something that you would learn in Trader Lab, and you have to also always vet it because all trading, every trade we take, it's random as far as that outcome of that one trade. Even if you have a statistical edge, it doesn't mean anything in the sense of which trade is going to be successful and what isn't. That's random. So it doesn't matter what your overall expectancy is. It has nothing to do with the next trade. That's why we're in a business of randomness or random distribution of outcomes. When we come up here, this is my next location to take a trade out here because the trend is down. So the only way not the only way, but the way I like to participate is only counter rotations. I am not going to sell in the hole. I want to be out when it's low. I don't want to be getting in. So I need this in order to get relocated with the advancing army. So this is one of those counterattacks, squeeze. Look at this thing. And what else do you see that's familiar? A buy sweep. Stops coming out and a sweep. What do we often see after a buy sweep? Counter rotation. Now it can just be that and then continue higher. But I'm looking at it and I'm looking to continually take shorts. I haven't had a long all day. It's not on my plan. My plan is sell it and wait for location. Here we come up and it gets smacked down at the location. I see the buyer. Now, this is difficult because look at the range. This is happening in a matter of, a minute or less. I find this hard to trade. If you do, welcome to trading. I find it because as a human, it's very difficult for me to execute within my risk parameters. So if I see what I'm looking to see and it just runs away and it's outside of my risk parameter, I don't trade it. I just go, well, that's too bad. Next. Now here's a trigger. Now this sets up a trigger here. I come back and I'm testing this right here. Here's my volume. Let's draw a little line here. You'll see that little node sticking out. We'll go take a look at it. So this is my volume, and this is very volatile. And when it gets like this, I have to tell you, I think about it and I go, well, uh, I don't have if it gets away from me, I just don't take the trade. And this morning, some of them got away, some of them didn't. You know, some do, some don't. Some will, some won't. Come on. So what you have is this here. Now this, nothing I can do about this. I can't do anything about that because this range is too high for me. I typically, so what I have to do in this volatility is cut size, and that's okay. And so because of the rotations, there's a couple ways I can do this. I can just increase my risk and keep everything constant uh, because I can operate in this, or I can cut my size down and keep my risk, or at least my dollar risk, constant. Because I have outsized rotations, I know that everything is kind of balanced in the sense of risk reward. So here is my trigger under here. So this I can't do anything with other than I have the sweeps. And I got to the VWAP in the mid. And here, no clue here, but there's my trigger. Here's my pullback. My volume is sitting there. My stop goes here. And I'm now, let's look a little bit further here. So you'd be risk neutral. You come back up here, you get taken out unless you're managing the trade. No big deal. Back to the low volume node, VPOC migration. This still sets up outside in trading or mean reversion. Let's look. Back here. Now this, there's no way to know about this. I was looking at this location, variable high volume node, as a location to take a short. My resistance is there. This was too fast. I did not get this. I was looking here. So when I saw the sweep, I'm going, okay, counter rotation coming. But it just, once it did this, I don't have a trade. So I'm just telling you, no trade there. Of course, those are the ones you always want to get, right? But I can't do it. So I don't trade it. So I have to wait. Notice support becomes resistance. Now this is more advanced. When you come outside here and you're breaking, you can come back and you can sell this. This is advanced, so I don't go into this. It's not really a structured trade, but it's structural. This is structural here, but no way to handle it. This is structural, potential short. Target is here, by the way. Outside edge now is here. So this is an outside edge. This is an outside edge. These are opportunities for continuation shorts if we rotate up into them. VPOC migration. This is very cool. Here's a sweep, VPOC migration. This sets up potential for short. And the outside edge is up here. Let's see what it does. So volume is here. And then you got your mid and your VWAP. That's your risk coming up there and squeezing. Outside edge is up here. Outside edge is up here. That's what you got. That's where we are. So let's see what we get now. We're now in real time. So I'm going to go into real time with you. If you have questions, please post them. This suggests potential rotation up here. There's nothing here at the moment, not a recommendation. And remember, this is not a trade calling room. You don't want to take my stops. I take them all day. So I have nothing here except to observe this outside edge around 87 and 90. This is not a trade for me. Might be for you. I do not like the mid because that's retail trader behavior. If anything, I like to exploit the mid for stops and then see what happens out in this area. So let's look at this area right here. Sellers are here. This is the mid. I've got my sweep here, which is suggesting up. Now, up to what? Part of the joy of trading. So let me turn some other things on over here. Hold on a second. One moment. Okay. Outside edge is here. So we want to see what happens in this area. You guys have questions, but remember, sweep, looking for the rotation, not a mid seller. No, thank you. See you later. If you wonder why, come to the Trader Lab. Why wouldn't we sell the mid if the trend is down? Counterintuitive, don't you think? We all sell the mid or have. Me, not so much. I do sell it at times. This is my location. So I'm looking here for potential behavior to come back here. Not a recommendation. And I'm not going to give you any, I'm not going to call trades because why? What's the point? Let's see what happens here. So the idea of this potential configuration we're in is called mean reversion. And if we think we might be in a trend down, maybe, then we might want to consider continuation trades. And that would mean short from an outside edge to attempt to come back inside to down here, which would be a nice range, don't you think? Now, like anything, when you put a trade on, you have to attempt to get risk neutral. So that means buying the stop, if you will, on your runners. Are you guys with me? So you get the idea is to get risk neutral. So if you put this trade on, which is basically here, then you need whatever it is based on your entry to your stop, whatever that is what you're trying to get on your first contract so you can get risk neutral. Then you hold and you manage based on your plan. Remember, the target on this, and it's not a recommendation, is this. Let me look a little further. It might be lower, actually. This. Sorry. So you got this. This is the target for this trade. And it's not a recommendation. Let's hang out together and see what happens. You guys have questions, why don't you ask them while we're letting this trade ferment? And again, guys, the outcome of any one trade is not material. It's all of them. PG, the low volume out here, think of this like shopping. It's the easiest way to consider what we're trying to do here. We're trying to be shoppers. And if in the store, this is the highest volume, think of it like what happens in the store. This is the fair price so far for the day because it's the highest volume. So the way that we might consider operating in this is what's too high. And if we find too high in a rotational configuration, then we can come back here to check the price. Is this really too high? Then back here. So this trade, I think, has a pretty nice risk to reward ratio. You're running about a 3-point stop. If you can get a 3-point rotation, you're risk neutral. Then you hang out. And we're either coming here or you're going to get taken out of the trade and you're going to scratch. That's it. That's trading. That's as complicated as this is. Whatever happens, happens. It's random. The key to this is waiting for the locations where you might get a reaction and then looking for triggers and, getting involved when all these pieces line up in alignment with what you think the actual condition of the market might be, which is down. Hasn't gotten to stop yet, but it looks like it's going to squeeze. Now, the thing about this is the outside is here. It can still come up in here. And then if it does, we got to look at this here. And if it pushes into this, then it would be put the car in the garage for a little while and wait. So let's watch this outside edge. And we know there's stops above here, okay? So that's looks like that trade will get taken out because you can see the buying here and you see the stops coming out, okay? And we still have selling iceberg, 624.50. So they are selling this. So we just have to see what happens. Okay, that trade would be done. You would scratch that trade and I always have to say, or you have a trade management process. That's up to you. And for this stream, all I'm doing is showing you the trades. I can't answer the question on the fractal you trade or how you manage your trade. That's another element. So we're still outside. So I'm still looking for shorts here. Because if we push into this, remember where it would fail. It's up here. So here's another trigger. Let's see what it does. High volume is right there. And we're going to draw our little rectangle around this thing for possible retracements, which are here. So we'll see what it does. Not a recommendation, guys. We're just observing areas of the auction and potential behavior. Buyers were here. They were absorbed. Let's see what happens here. Now, we all take stops and don't take these trades. I don't call trades. I don't call them because why do you want the pain of taking my stop? You can take your own. So this would be a 1 tick ahead, 3 ticks above. That's it. And if you take your stop, you take your stop. So basically, you're in at 88.5, and your stop would be 90.50, 91.25. So that's what, 2 3/4. So it's around 3 points, And then the goal is to get a 3-point rotation from here before taking your stop. So you can scratch. And if it doesn't work out, you take your stop. I know you probably are listening to this stream for something more predictable. We're not in a business of prediction, so we can't get that. But if this trade works, which nobody knows, because that part we're not blessed with, if you will, we're going for this. So this is the risk reward, So if I take a 3-point stop, so if you took this other trade here, the worst that would have happened, you would have scratched it or gotten something if you managed it. This here, court is still out on this one. We're still trying to get here because that's the configuration. So we'll see what it does. Let me see if you have questions. You guys got questions? Resistance, sweep. We got to see what happens here, okay? So this trade so far but it looks like it's gonna take a stop probably. Um, when it gets high volatility, it doesn't get easier to trade. I can tell you that. This is your micro resistance right here. We need to get below this, or else, because the buyers are right here and they're above. So if these buyers continue, then this trade has a problem. We'll see what it, right here is kind of the moment of what's happening. Anyway, I hope you're getting something from this. You guys have questions. How are we doing in YouTube? Please give a like. We do need to reject this right away here to continue lower, or else we're gonna, well, there you go. So this trade would take a stop unless you got scaled. I don't know if there, how many points was there? 86, 87. Did we get a 3-point rotation here? Where are we trying to go? So 88 half. Maybe, maybe not. Let's assume you didn't. Okay. So that would take a stop. So now there's nothing here until we come outside over here. There's nothing more to do now. I'm going to leave this over here. Actually, I'm not. I'm going to move it. See if I can move it. So our next edge is going to be out in this area. And then we have another one up here. So for me, I've got nothing now to do. I'm just have to wait and let it sort itself out. Market is short. At the moment, I'm in park. Yeah, Alan, that is an iceberg line. This. This is a low volume area. It's an outside edge, but it's not real. It's very choppy because the market is very, the volatility is high, so it's not smooth. So the outside is over in here, um, but the market appears to be squeezing now. So it's you're going to take any of these, you got to be pretty good at your execution and getting risk neutral. So for me, I'm not making recommendations, but I just kind of sit back when this happens. When it starts violating structure, then I get attentive and I just go, well, what does it mean? If this, then that. If not, then what? If we get through this, so if this, then down to the volume point of control. If not, then what? Then back out here. But if we get through here, then we can continue. So this is the next location that I want to be attentive to. Not necessarily trade, attentive to. So let's watch. Micro high volume is sitting right at the full session VWAP. And right now I'm still seeing the buyers. And now for me, I'm not necessarily inclined to get long, but that's just me. It doesn't mean you can't be taken. If you have an edge getting long in this, that's up to you. My thing is I just wait to sell it. And if I don't get a short or I see the squeeze is on and I come past, like I have my next area is up here. If I keep rolling along, then I just sit back. That's just the way I operate. I'm not saying it's the best because I don't know what the best is, but it has to align psychologically with you. So for me, my psychological alignment is to be looking for shorts. And if I keep pushing through locations, this is a location. If I just roll right through this, then I have nothing to do. I just go, oh, that's nice. So let's watch this area up in here, this here. And these are not recommendations. We're just looking at the auction and we're trying to determine if we're going to mean revert. If we mean revert, it could be a pretty nice trade. I mean, the range is huge for mean reversion, but this is our outside edge. So we want to watch this here. Let's open it up, try to read the order flow. Microstructures right there. This is our location. We want to look for a little retracement here, maybe up to here, right there, where the sellers took control. Let's just see what happens if we come back to 02. So this is a dividing line between these distributions. If I get through here and start coming up, then no bueno. Otherwise, it's this. So what I know about this location is it's kind of an inflection point in the auction. So we have to see right in here what's going to happen. It's pushing through, so I don't have a trigger. I don't have anything. So I have nothing now, anything to do with this. I'm just hanging out. Let's see if you have questions while we're waiting, okay? Now, I don't have anything to do here. And the reason for me, it's not that we won't rotate. That's all the time. What it is for me is I'm violating structure. So this was one area. This is another, an outside edge. The next area is up here. So since I pushed into this, I don't have a location. So I have another location sitting up here to look at to rotate down here. But I don't have anything. So I don't have a trade. The fact that it rotates is not material. Market's always rotational, you know. I mean, you can get this and then you still go, you know. So it's just nothing going on here. Now, when I'm in the stream here, what I talk about is structured trades. In other words, they're very specific as far as where a location for a trade might show up. When you can read the market, you're going to develop, and this takes a long time to develop, the ability to be able to read the order flow and look at more micro structures and trade short rotations. Now, in a day like today, there's a lot of, rotational behavior. You can always operate in this, but they're not structured. They're more fractal. So they're not. So when I come to a high volume area, here, if I get a trigger, I have choices. I can come back to another high volume area. So, but that doesn't mean it should be traded. It's just behavior. But from a structured point of view, I have no trade. So I just sit and wait. So if a trade like this shows up like here, there's really, it's not, it just doesn't have anything for me other than a trigger here. But here's the problem with something like this. You're going to see triggers everywhere. Which one is the right one? Well, for me, they have to be in alignment with a location. So if I don't have alignment, then I don't have a trade if I'm taking structured trades. So you guys have questions? Eugene, how do you avoid overtrading? Well, trade plan. That's really the simple answer is you have a plan and you stick to it. If you're making it up while you go, then you're just gambling. That's really what it is. It's a lot of fun, but I think you're better going to a casino, get the cocktails and the ticket to the buffet. Trading is a business of plan and statistical probabilities. So if you overtrade, chances are you've lost control and you don't have a plan. The plan is put together outside of trading hours, and basically we bring our plan to, to, to the game, if you will, and then it's a performance sport. In other words, the performance is if your plan has an edge, then your job is to wait for the edge, not to do anything else. You can learn this in Trader Lab, Eugene, and you're welcome. You could use the link in the bottom of YouTube, and anyone else is visiting in YouTube. The link down there will bring you to Bookmap Discard Trader Lab community, and there's no cost for it. You'd learn about trade plans, the business of trading, the emotional aspects of it, the challenges we all face, and we do. Um, you cannot stop the emotional stimulus, but you can interrupt it if you have a trade plan and statistics. When we see a rotation like this, the lunatic that resides under the hood wants this, right? And sees this. The lunatic does not see that or that. It only sees this. So next time you're thinking about this, you're not thinking about all the stops you would have taken trying to fade this. That's how I call it hide, the lunatic, the emotional state, the fight and flight response. We fight for this, don't we? But in the meantime, how many stops might we take trying to get short? You see, you get short there, take a stop, you see. So if there's no trade, that's it. It's not more complicated than that. There is no trade. Let's watch. So, Eugene, feel free to visit Trader Lab. By the way, if you're visiting in YouTube, how about a thumb up? Remember what the goal here is. The goal is to be stalking your trade that you already know where it might show up. That is really what this business is about. And now we came outside, we took out this, and now we're back under it. So we want to see if we come back up to it now, because we have some structure here, what happens in this area, out in here and here. So let's see what might happen. Don't know what will happen. Not blessed with that, but we do know what might happen. This one has pretty outsized risk to it. So this one might not fit because you're looking at 8 to 5. It's an 8 point risk. So for me, this isn't a trade I would take. Now, at least at this location, I might consider it at a different location. If we came back inside, I would evaluate it because I have my resistance and the microstructure up there. So this right now is an outside edge. We're going to look at it. This. And then we have this. And we have all this. So we have a confluence. Now we just want to watch. These aren't trade recommendations because what I do is I just look at structure. So we want to watch this little microstructure right here. Either pushes up or breaks down right from here. Let's see it. Cross above it. Now we got to watch this up here. And this is an important area, so we just want to watch it now. Are you guys following? How we doing? Yeah, Royal, yeah, you can see the icebergs. They are right there is selling iceberg, and the buying iceberg is there. Sell stops, buy stops. Okay, let's watch this behavior in here. Remember, outside edge at the moment is in this area. See what it does. So if you, well, I wouldn't be taking this trade unless I find a way where I can get my risk within my parameters. So I'm looking at this microstructure here because this is my last location where my sellers were. So if I'm looking at this, I can work with this, but I got to have my stop above here. And I think it's a little, it can be nasty, you know, but so this is my retracement. There's my sellers. So this little microstructure here is too high. This is now where my buyers were. So I got my buyers here, this high volume, and I've got my sellers there. So it's like a little box we can put around this thing, you know, and it's going to break one side or the other naturally. So this is your trigger. This is a fractal. This is your test, and that would be a short. So for me, I could take this one because I've got that and I've got the structure. If I was just going to put this here without this and the seller, I can't take the trade because this is where this trade fails. But once I have this, I can then, if I can enter properly, this is my support, this. And you can see it there because that's where the buyers were. So if I trade this trade or from here, I got to scale ahead of that and then hold it. And either it comes across and I scratch it, or these sellers, if we come back, those sellers will sell it again. That's basically all there is to this. So my support is here, right at the top of this, because that's where the buyers were. Okay? I'm going to throw a little line there for us so we could see it. So support and then resistance is this. Very choppy, very volatile, you know. If you're not used to trading this, it's better just to study it and not try to put dollars in this because it's different. And for most of us, because we're humans, we are manually entering trades. If you're not using a limit and you're using market orders, you might get filled next week. Hope that makes sense. You guys with me? Do you have questions? So this is Trader Lab. You might learn something if you're in Trader Lab. Why this would be a short and why you would have your stop 3 ticks above here. You would not be stopped out. You would be very risk neutral, and now you're wearing your helmet. Now, this is a mean reversion process. And remember where we're trying to go with this trade. Not, it seems like we're going to have to go cross country and maybe book a hotel, but we're trying to get here. Not saying it will, because that's not my job. But we got mid and VWAP. So stops are here, retail trader behavior. We also might get a counter rotation because retail behavior. But the auction is suggesting, let's see what it does. One never knows. It's all part of the thrill. Guys, if you have questions, please do not DM me. They need to go in the chat for the Trader Lab. I cannot answer DMs. If you want to have an individual meeting, not during market hours, to discuss specific situations or challenges, by all means, DM me and we would set a time. But I cannot respond to DMs. I get, let's just say, more than I can handle. So I can't. Besides, most of the questions have already been answered. They're in the Trader Lab or other participants. That's why we have a community. So please, I appreciate it if you wouldn't do that. Because I can't answer them. That's all. I want you to have answers. So this is our outside edge. So with this trade, you'd be risk neutral and subject to, again, how you manage the trade. You'd either get whatever you get out of it, you get out of it. And that's trading, you know. Now, the idea of this trade, don't forget, is to come across the range. And if it doesn't do that, if we keep pushing up, then for now, park. That's all. But this trade at the moment, it's the idea of the trade is mean reversion. And we don't know, of course, because it has obstacles. You know, it needs this trade to work. It has to get under here because now we're doing this. We're trading this right here. So this is a support area, an outside edge. If I can't get below here, I'm going to continue doing this kind of thing and maybe squeeze higher and maybe take these guys out, the shorts. It's always possible. So I just trade whatever it offers. And I also accept I don't know what it's going to do. So that's what structured trading is about. You just go, well, where's my trade? Do I have a trigger? Can I get risk neutral? Then what? I don't know. Because either it goes on to the target or it's going to fail and it's going to squeeze and we're going to get more shorts squeezed out. So that's up to the individual trade plan. Everybody has to decide. Now, there are traders in Trader Lab who are going to be taking longs. Absolutely. And for me, I just sort of go with what I perceive to be the higher time frame. So if I see the shorts getting squeezed, what I'll find is that I'll get my rotations, but I don't necessarily get to my targets. And if I can't get to my target and I come out above here, then I'm going to lay off for now, unless, depending on how it behaves. So I have really nothing to do. If I get taken out, I just chalk it up and done with that. Got a sweep, outside edge. This was all right. Yeah, Alan, I've asked for that never-ending rectangle that just keeps going. I know it's really important for keeping track of consolidations. It really is. Yeah, would be not hard to do, I would think, as opposed to doing it this way. Sweep, we're sitting still at resistance. Now, what I find with this is, I what I think, and the voice in my head is a lunatic, with Hyde. The voice, you have that voice always going, the noise. That's like, oh, you're going to get stopped out. Why don't you get out? Have you ever done that? I've done it. Everybody's done it. I can't begin to tell you. The one trade that always sticks in my head, and I talk about it here, is the trade was coming back. I was already scaled, and I was about to get taken out. And I said, "Oh, heck with it. I'm going to get out to save a couple of ticks." And then it was a 30-point trade. It never touched my stop. So I kind of like to talk about that because it was a great lesson for me. Because that experience has gained me a lot of um, profit because I stopped doing it. I let it take my stop unless there's something else that intervenes. But in a scenario where I'm counter rotating and I have structure, why would I get out of the trade? You know? Now we got a lot of volatility here today, as you know. 3 ticks, right? I think you'd still be in this thing. Can't really tell. I can't see it that close. Anyway, we're trying to go down, lower. Who knows? It might take all day. It might never happen. You have questions, please post them. Yeah, Michael, Royal Rule, what are the purple and green dots? Oh, these are sweeps. They're quite useful. This sweep here suggests the downside rotation to me. How I use it doesn't mean anything. And there's nothing mechanical. All these things do. Order flow gives you insight, and it's its own language. This suggests to me that. This suggests to me that. Didn't do it. Okay. So why would I only be interested in shorts and not longs? Let me take a wild guess. You too. Why do you think I'd only take shorts today? Well, ambience, you just have to follow your plan. If it's too dangerous for you, then you certainly shouldn't trade it. Um, Trader Lab traders are trading this. Well, Peter, I've asked him for it, so I don't know when that'll come, but it would certainly be nice if it happened. I mean, the single line goes indefinitely to the right, so why not a rectangle? Or have a little checkbox on it, whether you want it to extend or not, but some things that seem kind of simple are not. Here's the outside edge of this distribution. So what we're trying to do here is go from here to here. And if we can get below here, remember where our target is. This is a nice trade. This is what I've been talking about. It doesn't mean it's going to happen or that we won't come up and take out. It just doesn't mean any of that. But it is a structured trade in the Trader Lab. It's a mean reversion trade. So to get down there, we have to get under here. Okay? It's the same as taking the short up here, outside edge. And right now, this is kind of funky looking, but this is the outside edge. So right here, if this is too low in this area, we can come back and rotate. Now, for me, you know where the target is. So this trade, depending where you get into it, 5,800, and the goal of the trade is to get to 60. That's a 40-point trade. This is what I attempt to do in the Trader Lab. I'm not into all this, trying to trade all this stuff. I'm a little bit more get in the barca lounger, wait for the location, put the trade on, take a stop or get a scale, scratch, or get a scale, manage the trade, go to target. How many of these do you need? This is what I'm doing in Trader Lab and what I'm sharing. I'm not saying it's right for you. I'm not saying it'll work for you. You have to vet it. You have to come to Trader Lab and learn to speak a language of the market. This is not based on indicators. This is really based on the participants. Remember what the indicators are. They're measuring participant behavior. That's it. So that's fine. Except remember, those indicators have been in the public space since I started trading, which is 1980. So everybody's had these things, and they've been gone through beyond anything you could probably do because you don't have enough time. There's so many of them. So think about it. But how about this? Think about this. If you understood not what will happen, because it doesn't matter if you're using an indicator or anything, this or anything else, you're going to take stops. So that part's part of our business, overhead and cost of production. But suppose you understood how the market actually worked. And then because now it's location and behaviorally oriented, not a squiggly line in doing something. It's actually location, location, location. If you understand that, then you would be waiting for locations, and then you could deploy your favorite indicator to maybe assist you. But I find if I could read this, I'm not using a lagging or conflicting indicator. I'm reading the behavior, and then I'm attempting, and just like you, to get in alignment and to use structure. Except my structure is created here. It's not something that whatever it does, it does. So now what? Let's come back and look. What were we anticipating? VWAP and mid buyers. Okay. Now, here's the interesting question. Always, are there stops which are under here going to get flushed out and we continue down to our target? Or are they going to get paid this time around and we're going to come back and take this out? That is the possibilities. So now all you can do with this is go, well, it's not unreasonable to get buyers at the mid. That's what this is. What we don't know is if we come back up to where the sellers took control, Are they going to activate again? And then the market's going to take these guys out. So for me, the plan, and not a recommendation, is for these guys to get taken out. Now, they don't have to get taken out. We can do anything. So write that down. Maybe this is because the sellers are here and here. If they are looking to sell it, then where might they activate again? Well, maybe here, because this was too high. Sellers are here. So my resistance is going to be in here. Why? Simple. Sellers. Where's my sellers? There. So we'll see. And it doesn't mean that the buyers won't consume the sellers. But so far, we still got our sellers. So this would be the first line of defense. And there's a micro high volume structure right there. So this is resistance for me, the way I kind of look at it. So shorts, right? Short, resistance. Now we got to see. If I can get under here, I'm going to take these guys out. Thanks for playing. This is retail trader behavior. And the gamblers get paid. It's not a problem. But with the high failure rate of retail traders who all do the same thing, for me, I have found, think like a retail trader, don't act like one. In other words, learn from your experience. You've paid a lot of tuition, but are you going to keep doing the same thing if it doesn't have an edge? The fact that everything works randomly is not an edge. I mean, the fact that this right here, we might get our mid and hold, and then we're going to squeeze. Okay. But for me, I'm going down south of the border, unless, of course, it doesn't. That's it. Here, this is the target. Now, it doesn't ever have to get there. So and remember, right now, support is this, because the buyers were here. So I need to get under these buyers. So I got my sellers and I got my buyers. This is my sandbox. So my sellers are here, my buyers are here. What's the trend? Down. So trying to go there. That's it. Final questions. I got 2 minutes. And by the way, if you're visiting in YouTube, remember there's a link at the bottom. You can visit the Bookmap Discord Trader Lab community. There's no cost. You can become part of this community of like-minded traders who've come together to leverage their collective experience. It takes a village, as they say, to do the work. Data mining, statistical probabilities, trade plans, psychological management, managing the lunatic who's under the hood, all that. That's what we do in Trader Lab. Structured trades. There's 60 PDFs of these structured trades you can download. There's a link in Trader Lab. You can get a whole bunch of these things. And these are broad strokes. I'm not a vendor. There's no cost for this. And there's a library of webinars and the Trader Lab community. All of these are available to you at no cost. By the way, please give a like if you're visiting in YouTube. This is what the Trader Lab community looks like. There's a lot going on in here. It's 24 hours, 7 days a week. We have traders in ETH. They're all over the place. So there's a lot here, a lot of conversation, discussion, and trades posted, all kinds of stuff. And you're all welcome. And there's also the library of webinars. You can see there's a lot. Day trading fantasy versus reality. Why most traders using indicators fail. Are you trapped in trader Groundhog Day? That's when you work hard and keep waking up with the same results because you're trying to curve fit and get it to fit, make it better, all that good stuff. We've all done it. We all get the same results from that. So if you keep waking up with Trader Groundhog Day, consider using the link in the bottom of YouTube. Visit Trader Lab. There's no cost. Please give a like on the way out. Remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, and build out your trade plan. Please give a like. Thanks so much for visiting Trader Lab today, and I look forward to seeing you guys tomorrow. Trade safe. Have a vetted plan. Stay within your risk parameters. There's always tomorrow. And if you blow yourself out because of over trading and FOMO, you want to be here for tomorrow. You don't want to, as they say, take yourself out of the business because you can't control yourself. Thanks again, guys. Don't forget to like and don't forget to subscribe and visit the Trader Lab. Bye-bye.